Hi there, you have tuned into Closing Trades on ET Now. I'm Shrishti Sharma and with me is Aisha Faridhi. And what a day it has been for the markets because we're just building onto the gains and finally a good respite coming in for all the bulls out there. Even the breadth of the market has also improved throughout the day. And look at the move in India WIG, some signs of cool off, and we are now trying to drift below that 18 odd mark as well. But talking about Nifty 50, then we can't just take the eyes off the movement today. Almost 300 points gain is coming in on that particular index, but definitely the Nifty Bank is leading it from the front after scaling that 49,000 mark. We are just building onto the gains, and definitely all those large cap names are trading and bucking the trend. Definitely that push or finally some respite on the liquidity front coming in from the RBI. Stocks like Bajaj Finance, Finance, they are leading it from the front. Axis Bank, Bajaj Finserv are some of the top gainers. But in the last 1 hour or so, we have seen good moves on SPOLA as well because the stock did come out with a great set of earnings. And what a surprise on the margin front versus an expectation of 25%, 28% is what the company clocked in. 3.5% gain coming in for SPOLA. 3 p.m. is the press conference. Let's see whether or not there is any revision on the guidance by the management. But taking cues from that, stocks like Lupin are also seeing some bit of a recovery from the day's lowest point. Talking about some of the other movers, then definitely all these financials are doing well, but case in point being TVS Motors as well. That also did very well. Almost inline set of earnings, but no disappointment sometimes is also indeed a good news, and hence the move 5% uptick. But all in all, also have a look at Hyundai Motors as well, because just a while back the company did come out with the earnings and the revenue has seen almost a flattish growth on a YOY basis. 16,648 crores is what the company has reported, and the profit figure has been clocked at 1,161 crores. That's a fall of 19% on a YOY basis. So a decent set coming in from Hyundai Motors, but do note that there were no such great expectations given the decline in the volumes that we have seen on a YOY as well as on the sequential basis. But Aisha, indeed, what a recovery, and finally some bit of a respite for all the bulls out there.
Yeah, but I don't know how long it's going to sustain, because if you just were to look at the market breadth, just if we can bring up those advanced decline hands, yes, the Nifty is powering ahead by a good 1.25%, but has it undone the damage of even last week? The answer is no. And the breadth, if we can just bring up those hands for you, because you will see that they're getting a little bit conjoined from where they were just about an hour back as well. Now it's the declines which are taking over. That's the market breadth picture for you. So the pain still persists in the broader end of the market, and that really is the drawdown. But Kunal, what's today's bounce meaning to you?
I think it's a very strong indication of a long built-up formation. So, today being the, one of the days of the expiry week, crucial expiry week, the sentiment is completely different than what we saw in the morning. In the morning, there was a lot of selling across small caps and mid caps. You saw, many of the stocks falling down by a margin of 5%, 7%, 10% also. But then in the, throughout the session, what we saw was large cap names, and especially the banking stocks initially, which started to show signs of robust price action. So throughout the first couple of hours of the market correction, you saw the large cap banking names holding up quite strong. And then once the selling got over, you saw the larger cap names leading the charge from the front and then moving up higher further. That led to the confidence trickling back into the other larger cap stocks. So I think we are seeing a very strong classical recovery for the indices as well as large cap names. And I always believe that long build up formations is much more stronger than short built up, because or short covering, because generally when you see short covering, it is typically tend to be an excessive amount of leverage which gets cut, but that doesn't mean that the sentiment would start to improve. Long build up formations today on the larger cap names specifically indicates that the sentiment would start to improve going forward, and that could lead to market stability.
Okay, hoping for some stability. Let's bring on board Nischal Maheshwari, Naresh Mirani as well. Nischal, hi, afternoon. What's been your prognosis of the earnings so far, and anything that stood out for you?
Afternoon, Aisha. Thanks for having me. I think banks have stood out for me, basically. I think some of the banks, especially the larger ones, HDFC, Kotak, I think they have come out with strong earnings. If you really look at it, I think the earnings have not been very disappointing. The only thing is basically the expectations were very high. And that's why I think you are seeing basically even when you are giving good earnings like Dixon or today Keynes, the market is actually punished them. So that is a more of a problem, that the expectations are much higher. Otherwise, the companies have been reporting pretty good earnings.
All right, so companies have been reporting, so no major disappointment is what we are seeing from the earnings front. But yes, indeed, a lot of these earnings are trickling in. And once its stock is Cipla, we were just mentioning a while back that the stock is, after delivering a very good set by the company that's like a beat on all the parameters, the stock is inching higher with 3.5% gain. And why I'm highlighting this is that in the pharma space, in the major pharma company, Cipla always is the first one to come out with the earnings, and it does drive the major contribution from the US market. So whenever we get the results from Cipla, it actually changes the mood or sets the tone for all the pharma companies as well. And Kunal, I just wanted to have a chart check because we are just waiting for the management commentary. But meanwhile, a 3% move in Cipla, what does it mean for this particular stock? And also help us with your view on Lupin as well, because comparing both the companies, they have quite a similar product portfolio and similar geographies where they cater to.
So both of them are different charts. Cipla, for example, after this, trading or intraday upping for the stock, it looks like that the stock is trying to form a base 1400 mark. The stock has tested this level 3 times in the last 3 months or so. In the month of October, November is where the first time the stock had broken below the 1400 levels, and then recently twice is where the stock had fallen below the 1400 mark. So which means that this 1400 level should be a decent base building for Cipla over the very near term, and keeping that as maybe a positional kind of a stop loss. Traders could look at building up long positions over here. Lupin, on the other hand, I think the stock has still not formed a bottom, because it looks like that the stock today has given actually a sign of a breakdown, where it's managed to confirm a break below the swing low. Now on such days, it becomes very critical to observe the market reaction, especially for these kind of stocks which provide fresh legs of breakdown, because that could indicate that maybe it could be a sign of a false breakdown, or it could be a sign of an impending reversal on the downside. So we'll maybe wait out for a couple of days more for Lupin to show signs of either bottoming out, or at least signs of further correction on the downside. 2075 could be a critical pivot point for Lupin. If the stock happens to come back about those levels, that's where traders could look at a fresh buy.
Okay, that's the take coming in on some of those F&O names within the pharma pack, of course. Bajaj Housing Finance, that came out with a good set of numbers. So that stock, of course, is holding out well still. There's Federal Bank, Union Bank, also some earnings reactions there. Railtel, that was a little bit disappointing as well. So look out for what all of these stocks do in trade. But Naresh, to you then, it clearly seems like it's financials and private banks. If they were to see a consistent move, perhaps we could undo a lot of those at least last 10-day damage on the index per se.
Absolutely. So financials continue to be the largest sectoral weight in the index. As such, always been about 30%. So if that's the sector which has taken lead, and also the fact the sector has done underperformance over the last 2 years, last 3 years, even 4 years. So that could change going forward. And we've held on to the recent lows, almost a double bottom there. So looks promising, and names like Kotak Bank, HDFC Bank could eventually set up for a move towards their 52-week highs. So positive on banks as such, and that makes it more positive on the index as well.
Okay, let's take a very quick break with news that we're holding at the highest point in the day, at least for the index. The breadth, of course, is getting a little wobbly, but it's really a large cap-led recovery that one is seeing, and we've conquered the 23,100 print for the index led by the Nifty Bank. We'll take a quick break, come right back for more. Markets definitely are rebounding. It's important to keep a close eye on what the global markets have been doing, because remember, yesterday's carnage can solely be blamed on DeepSeek and the kind of global routes that we saw fueled by the China AI concerns. Today, of course, there's some bit of reprieve there. So marginally higher. I can't say it's a runaway move of any sorts, at least for the European markets. And the pre-market US futures, though, are making a comeback, still not undoing yesterday's damage alone. but about a 0.5% uptick is what the Nasdaq futures are sitting on. S&P is up in the green mildly, and it's flat for the Dow futures right now. So definitely the selling is abated from what we saw yesterday. But the legal trouble mounts for OpenAI as Indian media giants have now piled up lawsuits against the AI company. Sumita, in fact, my colleague, is here to tell us through what these allegations have been, what is it that they're saying about the company, and what the companies have actually said in their response. That's AI or OpenAI.
Yes, in fact, leading Indian media outlets are all set to join proceedings against OpenAI. Why? Well, these companies are accusing the ChatGPT creator of using their copyrighted content without permissions. So there are a whole host of allegations that these Digital News Publishers Association have mentioned in the application that they have filed. They claim that their news websites are being scraped to store and reproduce their work for OpenAI users. They also claim there is content adaptation being done by OpenAI, that AI models are trained on vast quantities of copyrighted works, and that too without a license, and hence it violates copyrights of Indian digital news publishers. They also claim that there is supercharging of online misinformation. Now remember, this follows after the first case against ChatGPT in India was filed by news agency ANI. And remember, ever since ChatGPT became big, the big concern has always been raised around copyrighted content and how that will be handled by the company, and which is why there have been similar global lawsuits, for example, by the New York Times, the Denver Post, the Chicago Tribune as well, and on issues of copyright protection. Now, OpenAI in its defense has issued a statement, and it says, and I quote, "We take great care in our products and design processes to support news organizations. We are actively engaged in constructive partnerships and conversations with many news organizations around the world, including India, to explore opportunities and work collaboratively." Now, OpenAI also says that there is potential of AI to enhance the overall news experience. They're building AI models using publicly available data, and that their models are widely accepted by legal proceedings. Now, very important to note that the outcome of this lawsuit could have significant implications for AI firms, which could face stricter regulations on how they source and use content, and it could eventually end up impacting their business models as well.
Right. Nischal, come in on this entire IT rout which is currently taking place. Of course, there is that collateral damage when you have the Nasdaq itself falling about 800 points on the futures last evening to the kind of 3% cut that was handed over to us. That rubbing off on IT stocks back home is one story. But is there really sense in, the panic that we saw in the IT names? Or would you say, wait for the dust to settle down, let's try and see what the implication of the Chinese AI, models is going to be on Indian IT services players?
That is for me.
Right, Nischal, for you. Yes, Nischal, that's for you.
So I think it's too early to say, Aisha, as yet, basically, that what kind of implication is going to have. But one thing is there, if some of the companies who were building at least in the 25 or 20 in 26, large orders coming from AI, especially the tech giants, I think that is now coming under question. So the capex, which was likely to happen in the US, that is coming under question, and that's why we're seeing this kind of problems in the US and Nasdaq. So I'm saying it's too early to say, but definitely there is a question mark about the big capex, which is likely to happen, and subsequently the orders out of it. So I think there has to be some caution as far as Indian IT is concerned.
All right, that's the take on the kind of sell-off that we are seeing in all these tech majors globally, of course. But on this particular topic, we also spoke with Ray Wang, Principal Analyst and Founder at Constellation Research. Let's go across and listen into him.
There is some work that's that's going on from some of the people that we're talking to here at Stanford and some of the universities, that maybe a lot of this was stolen from OpenAI. Some of this was stolen from other places that's going on. So we're trying to figure this out. But it's basically a fundamental disruption. It's like the same disruption India has with UPI, because UPI is $0 for a transaction versus $25 in the US for a wire or $1.50 for an ACH transaction. This is the equivalent. If we can get AI down to this pricing, then everybody will be reworking their CapEx models. But the challenge isn't that. The challenge is, can China get to Gen AI? Can China get to, general artificial intelligence as well? And if they do get to that, then that's going to be an interesting war. But there is a shot fired. This is basically what people call Sputnik moment. A war has been declared, and we're going to have to see what the race looks like at the first AI Cold War begins. I think what's lacking is really the investment and the CapEx to build the data centers, to be able to do these AI models. And I think the second piece is really the ability to actually get the large tech giants to actually make those investments in India to support a sovereign AI or to support multiple private AI models.
All right, we're moving on back to the equity markets then. Let's have a look at Nifty as well as Bank Nifty, because we are off the day's highest point. And just when we started the show, Aisha was just mentioning that whether or not we hold on to such gains is something that is still doubtful. And look at the move, because in the past 15 minutes or so, Nifty has lost almost more than 70 odd points, and Nifty Bank has now slipped below that 49,000 mark as well. But once its stock in focus is Bajaj Finance, all set to report its quarterly results. But what is the street penciling in? Let's go across to Varun to find out all those details. Varun.
So, we are expecting a decent quarter from Bajaj Finance, wherein the net interest income is expected to grow by around 22%, and the pre-provisioning operating profit is expected to grow by around 26%. The profits will grow by around 16.2%, and it is expected to come at around 4,227 crores. Now, the company has given the quarterly updates in the start of the month, wherein the company has said that the company has recorded highest ever quarterly increase in its customer franchise, and also the new loans that the company has booked was highest ever loan booked. Also, the asset under management has actually grown by around 28%, which the company has said, although the growth was at 7 quarters low, but was within the guidance of the company has given from 25 to 27%. The deposit growth, that was around 19%, and even that was at multi-year low. And that's the reason the overall growth, what we are expecting, is a tad bit lower than what the company used to deliver in previous past. But yes, keep an eye on NIMs and spreads, which are expected to be stable quarter on quarter. The overall borrowing cost, even that has bottomed out. But yes, look at the credit cost, because that is expected to increase a bit, and also look at the gross NPS number, because some analysts on the street are expecting that the gross NPS number would slightly increase. So that is one thing that you need to keep an eye on. Otherwise, if you look, it's a decent set of number which the company should, give this time.
Right, okay, not just Bajaj Finance, but it's going to be a very auto-heavy day as well come tomorrow. And you've got Tata Motors, Maruti, Shrishti, both delivering their numbers. Quickly tell us, what are we penciling in from them?
So, Aisha, we are expecting good set of numbers actually from both the companies. Firstly, let's talk about Maruti Suzuki, because there we are expecting a double-digit growth on the numbers front, be it revenue, EBITDA, or as well as profit for that matter, because the company did register 13% jump in their volumes in Q3. Other than that, the input cost is seen to be stabilizing, and the average realization has also inched up almost 4.5%. So, all in all, a good set expected from Maruti Suzuki. On to the bottom line, 3,624 crores is what we are penciling in. But definitely the key to watch out will be the margin number, because this time do remember that because of the new launch pipeline, the marketing spend was actually higher. The discounts were at the elevated levels to push out the inventory at the year end. And on the margin front, all these factors will impact at 11.7% is what we are expecting. Talking about Tata Motors, definitely the silver lining will be the commentary on the JLR, and that will be the key to watch out for, because do remember, just in the last quarter, the volumes improved significantly for Tata Motors JLR division, because back in Q2, the company did highlight some of the disruptions, supply-related disruptions happening, which impacted the volume. So a strong rebound there can actually help the numbers. Other than that, the India business, not much expectations there, because the volumes were just flat on a YY basis, but CV margins are expected to support and expected to do better on a YY basis. Here too, the margins expected at 13.6% on the consolidated basis. But do remember, for Tata Motors, the correction that we have seen in the stock happening, one of the key concerns has been that on a full year basis, will the management be able to go ahead and actually obey, or rather perform on their JLR EBIT margin guidance? There were some doubts regarding that. So any positive commentary on that front or any fresh comments on that front will be the key to watch out for when it comes to Tata Motors.
Okay, Tata Motors, Maruti, both on our radar. Nischal, but another big event, other than, of course, expiry and the Fed meet as well. What is it that the markets are anticipating from the budget this Saturday?
So I think two things basically the market is expecting. One is some sort of a policy where some money is put into the hands of the middle class. I think maybe a tax cut is the only possible way which I see forward, basically, so that the consumption side, which has become very weak, especially on the urban side, that gets a fillip. The second thing is regarding as far as the growth in the economy is concerned. So I think the other expectation is basically continuation of investment into the capex side. So these are the two main things basically the market is expecting. One is trying to get a fillip for the consumption, and the second is if the government continues with the capex mode. Last budget they had outlined, I think, 15 lakh crores, but I think only around 11 lakh crores got spent. So we have to see whether government upset or maintain the 15 lakh crore kind of a number, because I think that's going to be a solid boost to the economy again.
Nischal, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us on various sectors, your market outlook, and also what are you expecting from the budget 2025. But with this, fears, it's now time to slip into a very short break. Don't go anywhere. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.